Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look at the dollar versus Canada. Just thought it deserved a video, so let's get started. Let's start by taking a look at the daily chart. And if I look at this chart and focus on the yellow area here, where is this level defined? Well, it comes all the way back to these levels right through here. I'll outline each of these levels where there was either a low or a high on again, this is a daily chart that found resistance or support within this area. And as you can see, there's a number of different times where the market just reflected or deflected off of this area. That is significant. It's a significant. Traders can see that. They can see the market moving above it. They see the market moving below it. They see it go back to it, and then right above it and low it. And you can see how it just kind of rotates above and below the level in this non-trending sort of trading environment that the dollar of Canada has been involved with, up, down, up, down, up, down, up, down, so on and so forth. So that's significant from a trading perspective. And you can see in trading here today on the daily chart, what did the price do? Well, we moved back into that swing area between 134.67 and 134.98. That's sort of the wide range that if you're a seller looking for a move back to the downside, you'd want to look to sell in this area right through here and hope that the price stays below this area and moves back to the downside. Also on the top side, we have the 100-day moving average, which is another key level right through here. Now, why would you look to sell? Well, we've been down for 7 consecutive days here in the dollar versus Canada. So the trend is to the downside. We're seeing oil prices move higher, which is helping to support the Canadian dollar. The dollar Canada moves lower, the Canadian dollar moves higher, and so that is what we're seeing here on the move to the downside from a fundamental perspective and also from a technical perspective, breaking below the 100-day moving average, breaking below this swing area. Now, on the downside, we do have work to do if the sellers are going to remain in control, and that remains at the 200-day moving average. You can go back in time to this month in August where the price dipped below the 200-day moving average, failed, and reestablished support on this day right here before, boom, right to the upside, big, huge move, trend move to the upside that ended up, reaching our new high and leading to this consolidation phase over the last 5 or 6 or 7 months in the range. So that was significant of this 200-day moving average. The last time the price traded below the 200-day moving average was way back here, or closed below the 200-day moving average was way back here when the low was made here. The next day we moved above the 200-day moving average, closed above, moved above the 100-day moving average, and the rest is history to the upside. So the 200-day moving average is a key target on the downside, and we need to get to and through the 133.777 if the price is going to move to the downside and continue its bearish move and increase its bearish bias to the downside. So that's the daily chart. That's the view from the daily chart. I think it's pretty clear from a technical perspective in between the 100 and 200 watch this swing area on the top side for resistance. Now let's take a look at the hourly chart and see what that is telling us. And on the hourly chart, it's interesting in that the corrective move off the low that we saw in yesterday's trade came right to the 100-hour moving average and found willing sellers against that level. I'll take the hours off so you can see it very clearly, how the price found sellers against that 100-hour moving average right here. Why? Because risk can be defined and limited against that level as long as the price remains below it. The short-term bias remains to the downside. And so traders who sold against that level have been rewarded already with a move down from about 134.82 to the current level of 134.44. So a good 40 or so pips to the downside off of that level. So what do traders know from that? Well, they know that increases the level's importance going forward, that 100-hour moving average. As long as the price can remain below that 100-hour moving average, the sellers remain in firm control. If we were to move above it, then that would be different. That would be a different story, and we could expect that the price would then move up toward the 100-day moving average and give the buyers some satisfaction, give the buyers some hope that perhaps the low is in place, and then maybe toward the 38.2% retracement and toward the 200-hour moving average, just moving back down toward that 38.2% retracement. That would be the hope for buyers. but only if the price can get above the 100-hour moving average. So when I say the sellers are in control, this is why the sellers are in control. Not only is this 7 days to the downside, but this selling against the 100-hour moving average is more bearish here. As long as the sellers can remain below that level, they are in control, and we can look for potentially a move lower that would take the price down toward this 200-day moving average. Ultimately, if we're able to get below the 134.05 level. So there you have it, a detailed look at the dollar versus Canada. I thought it was worthwhile because some key technical levels are in play and really showing themselves for you as a trader. My name is Greg Michaelowski. Good fortune with your trading. Bye-bye now.